Good morning, all. A warm welcome to the SBI Securities daily market dose, where we discuss key global market trends, Nifty as well as Bank Nifty levels, and derivative data inputs, along with the currency outlook. Now, yesterday, what we had witnessed was a classic example of sell on news kind of sentiment. Post gap up opening and sustaining above 19,530, as we discussed, Nifty moved to 19,580, and what followed was a resumption of selling pressure from higher levels. Not only did the index fill up the opening gap, but it also ended the day lower, uh, close to the previous day's low, which is kind of negative. Now, what this has done is it has got the index back in the range of 19,250 and 19,450 that it was trading in the past seven sessions, and we have discussed it several times now. So for me, important level to track for Nifty going forward will be 19,450, 19,470 kind of levels, where the 20-day exponential moving average is placed. Now, I would be going aggressively long if I see a close above 19,450, 19,470. Until and unless that does not happen, I would be a bit nimble footed. I would wait for the close above this level of 19,470. Now, what's important is that looking at the gift Nifty, where it's expected to open 100 points lower. Now, this will be opening very close to the support zone of 19,230, 19,250. Remember, yesterday's close was at 19,380 odd levels. So another 100 points down, it would mean 19,260, 19,250 levels. This is the lower end of the support range that we are talking. This is also the 50-day exponential moving average. So in case we see a breach below this level of 19,230, I feel extension on the downside could be witnessed up to 1910 to 19,000. So I feel today's close will be very important. We need to close above 19,450, 19,470. If that does not happen, then the next week also could have some negative sentiments going in. So for the day, the support will be at 19,230, the first support, followed by 19,150. The resistance would be around 19,380, followed by 19,450. So that's the important levels with respect to Nifty. Now, if we also see the derivative data, now it's very important to see what the monthly option chain is shaping up. If you see the derivative data, the highest put writing has been witnessed in 19,400 as well as 19,300 puts, which implies 19,230, 19,250, the levels which we are discussing. This is the importance, because 19,300 put writers in the entire month till now have been able to kind of defend this levels of 19,230, 19,250. But post opening today, we need to see the reaction in the 19,300 puts, and that would give us a feeler of what kind of trend is going to emerge in the next 4-5 sessions ahead of the big monthly expiry. If we now come to Bank Nifty, now it moved up to 44,700, 44,900 on the similar lines to Nifty yesterday post opening. But this index also witnessed selling pressure. But there is some kind of difference of the chart formation. If we see Bank Nifty vis-a-vis Nifty, important to note here is that despite the selling in Bank Nifty, index has closed above the day before yesterday's closing level of 44,480, and much above the upper end of the consolidation range, which was closer to 44,100, 44,200. Remember, in the last few days we had been discussing that 44,200 is kind of acting as a resistance, and Bank Nifty every time after retesting that levels is slipping on the downside. But yesterday, day before yesterday, we not only managed to cross that, we Bank Nifty moved up to 44,800, 44,900 kind of levels, and yesterday closed again around 44,500. But this is still above this resistance zone of 44,100, 44,200. So what we feel is from here on, for Bank Nifty, 44,100 will act as a key support, and till this is held, I feel that Bank Nifty would trade between 44,100 and 44,700 for the next few sessions. If we see Bank Nifty slipping below 44,100, that would mean that it could retest further lower levels of 43,850, 43,900. Looking at the options data, the strong put writing is visible in 44,500 calls as well as puts. Now, if we adjust the premium of this both 44,500 calls and puts, the trading range works out to be somewhere closer to 43,950, 43,900 on the downside and 45,000 on the upside. Now, it's a big trading range, but this implies that the coming week, including today, it would be full of volatility. And this is because for the better part of the month, both Nifty as well as Bank Nifty, both indices have traded in a tight range. So this is for me the structure of Bank Nifty: 44,100 first important support level, followed by 43,800. Also, to gauge the trend, let us understand what the FIIs have done yesterday, and because that will give us a feeler of what could be coming forward in the next few days. FIIs, see, FIIs in the cash market, they have been net buyers to the tune of 1,500 odd crores, while DIIs have been net buyers to the tune of 5,800 crores. But I would not take cues from this number, because yesterday's numbers would also include few block deals of Coforge and few other companies that have been done yesterday. So I feel net it could still be a sell figure if we adjust the numbers of the block deals. If we closely look at the open interest data of the market participants, FII's long short ratio is still at 42-43%. And here there's a catch. Now any dip in this number below 40% for FII long short ratio in index futures, that would be very crucial, and that could determine the trend of the market going ahead. There have been sellers in index futures yesterday. They have also gone aggressively short in index calls and have bought index puts. So this data positioning looks weaker compared to what we had discussed yesterday. It was neutralized, but once again the data positioning looks weaker now as of yesterday's evening, what we have tracked. So I feel it's important. So once again, if I need to summarize the Nifty levels, 19,450, 19,470 will be the key levels in Nifty on the upside. Bank Nifty 44,500, 44,700 levels will be the most crucial levels that are required to be crossed for the continuation of momentum on the upside. Sectors, now coming to sectors that witnessed outperformance yesterday were capital goods, power, mid-cap, IT, while we saw selling pressure emerging in from higher levels in sectors such as oil and gas and metals. Just one bit about metal sector now. With dollar index currently trading at elevated levels of 104, I feel one needs to be cautious with the over leverage positioning in metals, because generally there is an inverse relationship between the dollar index and commodities. So rise in dollar index would mean weakness in commodity stocks. So just please be cautious in being over leveraged in terms of metal stocks. Coming to the currency front, there was some cool off from higher levels in the US 10-year bond yields, and because of that USD INR also appreciated from its lows of 83.30 to 82.56 where it is placed currently. Now with yesterday's fall, it has once again entered into its prior trading range of 81.90 and 82.90. So today also we expect the pair to trade in a range between 82.30 on the downside and 82.90 on the upside. This is as per the spot levels, and positionally now 82.90 is a important level that we need to track. And if we just keep aside the moves in the USD INR from 83.30 to 82.50, which has happened in the last 3 days, I feel the major cue for the USD INR would come from the dollar index, which is at 104 level. So in case dollar index crosses 105, 104.80, 105, that would mean that USD INR could once again breach 83 and go beyond that. So one needs to keep a close eye on the dollar index. 104.80, 105 levels are the most crucial levels to watch out for. So that's all from the today's episode of SBI Securities Daily Market Dose. We hope you enjoyed listening to our podcast and found it useful for your trading decisions. Do tune in tomorrow for more market related updates and insights. Until then, happy trading and stay safe. Thank you so much.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.